Hi, everyone. As you are filtering in here, I'll go ahead and do some quick introductions. We'll go over some housekeeping items, and then Mike will jump right in. So it's good to be back. We're excited to be back. Hopefully some of you are attending some of the state events that we have coming up. Mike has the privilege and opportunity to speak at those, and we're very excited. So if you're there and you see us, please come say hi. We would love to talk to you. So let's go over some housekeeping items and some introductions. So if you are here for CPE credit, we do need you to do a few things in order to receive that CPE credit. We will need you to answer the poll questions as they pop up on your screen. If you have any issues with that, please just shoot me a message and let me know. I'm happy to help you sort that out. But we do have to have those poll questions in order to award you CPE credit, along with the survey at the end of the webinar. It will pop up for you as you're exiting again, and also be emailed to you in 24 hours. So a couple ways to get your hands on those. A couple other things to take note of here. As we are going along, if you have questions, please reach out and ask. We are more than happy to answer your questions. You can use the question button. If you move your mouse around, it should pop up for you in the Q&A, and we will do our best to address those at the end of the webinar or follow up with you via email. We also will be linking today's slides in the chat, uploading it to Zoom, and emailing you after the webinar. So there's a few ways to get your hand on the slides and the handouts. So keep your eyes open for those. And I think one more housekeeping notice, if you're interested, if you love our webinars, if you want to access them on your own time, you can access them through the Salt Vault. There should be a separate link included so you can do that CPE on your own time, and it will automatically email. It does have a cost, which I don't remember off the top of my head, but any questions about that, please reach out and ask. I'm happy to answer those. And let's do some introductions now. First, Sales Tax and More. Sales Tax and More is a full-service consulting and solutions firm. We have a really great team here of experienced tax professionals who are very dedicated to fulfilling your state tax and related needs. So we do a lot of sales tax returns, sales tax registrations, consultations, research, and like our name states, more, along with a lot of free resources. We have a really informative YouTube channel. We have a podcast. We do these webinars. We have a lot of resources on our websites. We keep up to date with policy changes. So keep your eye out for those. Subscribe to our email list if you want them emailed directly to you. And if you would like to work with us, we would love to work with you as well. And a quick introduction for our founder, Michael Fleming. Mike's state tax knowledge is very well-rounded, and he has helped thousands of companies of all sizes and all industries, and is especially well known for his work in the e-commerce industry. And I apologize for moving so fast here, Mike. I wanted to get the mic over to you, but now the floor is yours.
Okay, well, thank you for that wonderful introduction, Ellie. And we've got a lot to cover today. We're going to talk about how to choose who files your returns. We're going to talk about, doing it yourself. We're going to talk about the different types of third parties out there. We're going to talk about items that you need to consider when choosing a provider. And then we're going to talk about not all providers are created equal, even within the same type of group. For example, software companies, and we'll touch on that. Then we're going to go into some return basics, some red flags. Those are the items that if you're not doing correctly, they could allow a state to target you for an audit. Then we're going to go over some case studies if we have time, and then we'll open it up to questions. So a lot of information to cover in a very short period of time. We do offer sales tax return services ourselves. We want to get that out there. You may say we have a little bit of a bias, and we do. But we're going to try to give you a lot of information today, so that you can help choose how to do it best, what system you want to do. So first of all, the sales tax return filing options, you can do it yourself. And when you're doing it yourself, you can do it manually, which is not too bad when you've got a limited number of easy states. Some states are a lot harder than other states. Or there is specialized software out there that you can purchase. Sometimes this can be expensive, but it can certainly save you a lot of time and energy, especially if you're filing for multiple entities in multiple states. And you had a lot of the tougher states, like a Louisiana, like an Illinois, like a uh, uh, Colorado. So the software can make this a lot easier for you. Now, using software to do your own returns is different than letting a software company file your returns. Two entirely different things there. Now, before we go any further, I want to say this. You're more likely to be targeted for a sales tax audit than you are for an income tax audit. And the states are a lot more aggressive than the IRS currently is. You know, the states are like the IRS was 30, 40 years ago. They're very unreasonable to work with sometimes. So you want to make sure that you're limiting your red flags. You're not putting yourself on the radar of the states. And we're going to talk about what some of the red flags are later.
Hey, Mike,
Right now, yes.
I just want to jump in here quick. These slides don't have the poll slides, but we do have the poll questions ready to go. So whenever you feel ready or I can jump in, we can do those. But sorry to interrupt and interrupt your flow, but uh we can do the first poll now if you'd like. And I apologize. Definitely my fault.
Okay, let's do the first poll now then.
All right, so I'm launching poll question one. If you are familiar with our webinars, we mention very consistently one particular thing. So which of the following do we mention in every webinar? Your choices here are it all starts with Nexus, it all starts with taxability, Nexus is the only thing that matters, or none of the above. Mike, most people are nailing this one right off the bat. We still have answers coming in pretty quickly here, so let's leave this open a few more seconds, and we can review and move forward. So why don't we, sorry, my answers are still rolling in pretty quick here. Thank you guys for participating. We really appreciate it. So let's close it out and move forward. Most people answered it all starts with Nexus.
All right. Yes, that is what we say. It all starts with Nexus because if you don't have this link or connection we call Nexus, state can't require you to do anything. So no Nexus equals no problems. So that's why we say it all starts with Nexus. All right. So let's talk more about sales tax return filing options. You know, if you're not doing it yourself for whatever reason, you can hire a third party. This is sometimes called managed returns. Now, there are different types of third parties out there. There are sales tax specialists like us that do returns. Your existing accountant, your existing bookkeeper, they may offer a return service. And then there are software companies. And I break the software companies really into two different groups. You have a full service software company, like an Avalara or a Vertex. You know, they can do pretty much everything that you need them to do. But some software companies we call limited service software companies, and they just can't file all of the returns. So that would be a company like a tax jar, and they have limitations. Now, we're going to touch on some points to consider here when deciding how to choose how you want to move forward. And one of them is how much time do you have to devote to the returns process? How much time do you have to devote to sales tax in general? Are you downsizing? You know, if you have 28 people in your department, all of a sudden you're moving down to two people, can you do everything you used to do? And we're seeing a lot of that out there right now. Are you about to downsize? You know, and if you're downsizing, What else could you work on rather than the returns? Are you having a hard time hiring? We're hearing this from a lot of people. They want to do the returns in-house, but they can't get the people hired, or once they hire them, they're leaving very quickly. Um, so those are some of the points to consider, um, when you're deciding if you want to do this in-house or if you want to do it all. So let's talk about managed returns, third-party prep. And we're going to go through all of these. Right now, we're going to talk about sales tax specialists because not all preparers are created equal, even within the same group. So, sales tax specialists, not all of us are actually sales tax specialists. Since Wayfair, it seems that everybody says they're a sales tax expert. But this is something you learn by doing over years of time. It's not like you can go to uh, school for sales tax. There are very few classes in school about sales tax. It's just something that you learn by doing. And a lot of people, even though Wayfair is 5 years ago now, not a whole lot of experience there. Another thing, not all of us who are sales tax specialists offer returns. Some of us say that we do returns, but we're really brokering them out. So I know of a lot of people who are using companies like Avalero. Well, what do you need a middleman for? If you're going to work with someone who's brokering returns, a lot of times it may be better just to go to the software company. And then some of the preparers out there, some of these sales tax specialists, they send your data overseas. For some of you, that may not be an issue, but for a lot of our clients, they want their data to stay here in the US. They don't want it being sent to Pakistan or India or the Philippines. They view that as being more risky than having all of the data worked on by someone here in this country. So not all preparers are created equal. When it comes to your existing accountant bookkeeper, some of them are great and they've had strong SALT programs for many years. SALT stands for state and local taxes, but some are new to SALT. And since Wayfair, like I said before, everyone's an expert. And again, some of these are brokers. The software companies, come to these accountants and bookkeepers, tell them, you too can be an expert if you just use our services. They find out after the fact this is generally not enough, because if you don't know the whys behind things, then you're reaching out to people like us to help you help your clients who are utilizing other software. So, are they brokers or are they actually doing the returns themselves? And if they're utilizing a software company to do the returns, do they have the knowledge base to know why certain things need to be done? So can they support you with their efforts, or are they pretty much just signing you up with one of these software companies? You think that they're going to be supporting you. They think that the software company is going to be supporting them. And unfortunately, that's very often not the case. All right, so let's talk about the software companies. So software companies are generally good at software and or marketing. They market themselves very well. When it comes to services, they often are not so great. And it may appear that they're great for the first year or two or three, but all of a sudden you start realizing all of these problems are coming to the surface. And at the end, that's where a lot of our case studies are about. So what we mean by full service is that they can file in all states, that they can generally file all the forms you need to be filed and can balance to how you want them to balance. And we're going to talk about balancing later on. There are a number of different ways to balance. Limited service companies generally means that they either can't file in all states, or they can't file all of the correct forms or don't support all of the balancing options. Um, one company in particular, I'm going to pick on TaxJar. Remote sellers should be should be getting registered in Oklahoma for the seller's use tax or the vendor's use tax. For some reason, TaxJar could not file that. So they told everyone to go out and register for sales tax. Well, there's a big difference. I mean, for the use tax, you don't have to, pay any money to the Department of Revenue to get registered in Oklahoma. You don't have to get registered with the Secretary of State. You don't have to get a registered agent. You don't have to, and getting registered with the Secretary of State, by the way, is $350. You don't have to file annual reports, and you're generally not going to be subject to the income tax. But since this company could not file that, they're telling people, "Oh, don't worry about it. Just register for the sales tax." Well, now for that registration, you generally have to pay the state of Oklahoma $25 just for that. Now you got to get registered with the Oklahoma Secretary of State, which requires a registered agent. So there's extra fees there, and it's generally going to subject you to income tax. So limited service software companies, I mean, if you're a very small seller, maybe the price differential makes sense. But for any large sellers, you really don't want to be working with these limited service software companies. In my opinion, you don't want to be working with any software companies because software companies are good at software. They're generally not good at services. So, with full service software companies, one of the main concerns can be customer service. They may be able to file all the correct returns, and they may be able to file all the right forms, but the ability to get correct and timely answers can become frustrating. One company, we'll pick on them, it's Avalara. They don't even allow calls or emails. They knew they had a customer service problem, and the customer service, you'd call up there for an answer, it'd be a customer service person. It's not the person doing your returns. So trying to get an answer out of them was real tough. But now here's a notice that they put out. Beginning in January 2021, they knew their customer service issues were so bad. They said, "How do we fix this?" And they took a software company approach. And now, if you have a customer service issue, you can't pick up the phone. You call someone. You got to open up a problem ticket. And to me, I just don't like opening up a ticket and waiting for someone to come back. So I think they've taken an issue they knew was bad, and they've actually made it worse. Support case. So again, we've talked about some of this. Limited service companies, their deficiencies can create more red flags, create the red flags at a much higher percentage. TaxJar did, what's called a forward calculation and ignored the actual tax collected. This can create a problem of remitting too much money to the states or not enough money to the states. And a lot of times these issues don't show up immediately. Some take a year or more to show up. So, they're going to be the cheapest option out there, but cheap, in my opinion, is the enemy of good sometimes. Now, if you're a real small company, you're going to have real small problems. So maybe the cheaper option is your best way to go. However, for any company of any size, I just think it's ludicrous to be working with someone who can't do what you need to do, because you're more likely to be audited for sales tax than you are for income tax. And there are a lot more returns to be filed. There's a lot more room to make mistakes. And the states are generally more aggressive, can be harder to work with, much harder to work with than the current IRS. The IRS of today is a lot different than the IRS of 30, 40 years ago. So you want to make sure the provider is right for you before you sign an agreement. And as I mentioned earlier, cheap is often the enemy of good. Large companies, especially, should think 3 times before going with a limited service provider. And don't be fooled by the large amount of customers. Some of these companies will say, well, all of these people, they trust us and they work with us. Well, a lot of them, these software companies, it's like a revolving door. People sign up, they're trapped sometimes because, they don't get a refund, they pay up front, or even if you do try to get out, they're going to charge you for the full amount at a time. Um, but as soon as that 1 year contract is up, I'll tell you that the people who work with some of these software companies, that's our greatest source of business. They're looking for some place where you're not just a number, where you can get that extra hand holding. So we're going to go over some of the questions to ask next, but um, you got to cut through the hype. You got to cut through the marketing noise before you're deciding who to go with. Not only whether you want to do it yourself or who to choose, um, but how you want to do it. So, questions to ask: who's going to be your point of contact? If there's a problem, can you pick up the phone and call the person? Is it going to be a customer service person? Is it going to be you can't even call anyone? It's going to be a trouble ticket. Or is it going to be the actual person doing your returns? So with someone like us, you have a problem with your returns, you pick up the phone and you call the people who are doing your returns. There is no middleman. Who confirms that all the sales tax collected is actually remitted? When we, get to some of the case studies later on, companies find out 2, 3 years into this. I mean, it's the salesperson says, "Hey, just sign up, and you sign up for the streamlined sales tax, and we'll, do so many of your returns for free." Well, little do they know that these local jurisdictions generally are covered there, and you have to pay for those separately. Salespeople generally conveniently forget to know that, or the B&O tax in the state of Washington. And we have companies coming to us all the time that all of a sudden they realize they've got 3 years of tax collected, not remitted, because they thought that, hey, Avalara is actually calculating the taxes. They should let us know if those taxes are not actually getting remitted. And unfortunately, it doesn't work that way. So who confirms that all the tax collected is actually remitted? Who tracks the messages in your online account? I mean, sometimes the state will send, regular mail. Sometimes they'll send emails, but a lot of times they just post these changes to the online account. And if no one's checking it, you get a filing frequency change. And, the software companies are continuously filing at the old frequency. And now there's a bunch of back returns that need to be done. And back returns, no matter who's doing them, whether it's a software company or us, they're generally more expensive. With us, if it's our mistake, we're going to pay for that mistake or that issue. Whereas a lot of the software companies say, "Hey, that's your responsibility. You should be checking for the filing frequency changes because we don't check the messages in the online accounts." Who's checking the state fees for renewals or for other fees, general messages, notices? So who's checking all of that? So notice management, states are not very efficient. And, if they think that you haven't paid or you paid the wrong amount, they're going to generate a notice. And that can be sent by regular mail. It can be sent by email. It can be in the electronic account online. So some companies say, "Oh, yeah, we've got notice management." And they're going to notify you when they receive a notice. And then it's up to you to clear it. So notice management, what do they do and what do you have to do? With us, just to draw a contrast here, notice management means we're going to clear that up for you, and we're not going to charge for you, provided it was just a state issue or if it was, one of our issues. Sometimes you may not get the money here on time. I mean, it's, uh, if the money doesn't come in until after the 20th, and most returns are due by the 20th, that's a client cause notice. And no, we're not going to do those complimentary because you created it. But if it's just an issue of the state, or if it's our fault, then we're going to pay for those. But no matter whose fault it is, we're going to help you get those um, fixed, corrected. They have to be addressed. Another question, what reports are provided? A big problem because, the actual amount of money you collect is different than the amount of money that gets remitted. And a lot of people are saying, well, why is there a difference? Why am I not balancing to the penny? So what reports are provided? So uh, reports are needed for bank reconciliation, reports of returns filed, tax remitted, etc. Are they providing you with reports, or are they providing you with the actual information so that you can generate your own reports? As we said before, who confirms that all the sales tax collected is remitted? How are the taxes actually paid? That's a big question. Are they going to be pulling it from your account? Are they going to be asking you to send them money by a certain day in the month? If they're asking you to send the money, you need to ask, well, what date does the money need to be there? A lot of these companies, just move the money from your accounts directly to the states. I don't personally think that's a great idea. I don't like the states having all of my banking information where they can go into my account and pull out as much money as they want. We've heard horror stories like that. So I like the money, with our clients, they send it to us. So the states don't actually have access to your bank accounts. Late penalties and interest. Who's responsible? Under what circumstances are they responsible? Who's actually preparing the returns? Are they being done here? Are they being done overseas? If you think you're working with your local accountant or your local bookkeeping firm, are they actually are they actually doing the returns, or are they brokering them to someone else? Where does my data go? Are you keeping it all here in the US, or is it being sent overseas? How many multi-states clients do you prepare returns for? So if you're going to be working with a bookkeeper or an accountant, if you're a large seller and they've got 3 or 4 clients they're working with, do they have the expertise to be able to handle you? How long have you been preparing returns? Oh, well, we started listening to Avalara's marketing message a year ago. So we've been offering this. We too can be the sales tax expert for the last year. But they don't actually prepare the returns a lot of times then. So do you have the expertise to defend me if we are audited? So these are some of the questions that you need to be asking, and you need to be comfortable with the answers before you decide who to go with. And maybe, a software company is who you want to go with. Maybe you don't want to come with a company like us. But if you still have to ask these questions and find out which of the software companies out there is best for your situation. All right, so we'll get back to some of these issues in a little bit. Right now, I want to talk about some sales tax return basics. So one of the firsts is, do you have to file online versus paper returns? And more states are requiring online filing. Sometimes, in all scenarios, they require online filing. And sometimes it's when you reach a certain level, and that level can be based on sales or it can be based on tax collected. And if you've got to start filing online, it can create a whole new set of problems. For example, online accounts. Um, and we're going to go into each one of these in detail, so I'm not going to go into them now. So balancing, we'll talk about that, and due dates. So online accounts, you have to have an online account to file online, and states often don't make things easily. Sometimes you think you have an online account because you registered online, but there's generally a separate process from the registration. Sometimes it's a whole different, website. Sometimes it's the same website, but you got to take all of this information that they sent you during the registration process to be able to go out and set up your account uh, to be able to file returns. And sometimes it's tougher than registration. I mean, with registration, you're providing them with most of your data, and the states can become very intrusive asking for that data, but you can figure your way through it. A lot of times, a state may send you 5 or 6 different pieces of mail, and in order to set up the ability to file online, you got to get the letter ID from the third piece of mail that they sent you. I mean, if you don't have a good filing system, setting up these online accounts can actually be tougher than registering themselves. So you got to have a good tracking system for information. As you're setting up these websites, you don't want to be shuffling through a big pile of mail that the state sent you. You want to be able to track, what the websites are, what your account numbers are, what tax types. A lot of people nowadays are filing the wrong tax types. Usernames, passwords, emails, security questions. You want to keep this all in one place. We create what we call a tracker, and it's just a spreadsheet that contains all the information you need to file your own taxes, or all of the information a third party needs to file your taxes. So you got to have a good system for this tracking. Now, balancing. When you're sending in your returns on paper, it's not an immediate issue. But when you're going online, you may not be able to hit that submit button if your numbers don't match what the state is expecting. So how do you make it match what the state is accepting? So it could be that you collected too much or too little. Reasons are varied. Some reasons include incorrect zip codes, incorrect cities, rate sources, could be out of date or incorrect. And some of it is real simple. Some states you're going to be collecting sales tax in dollars and cents, but when you remit your returns, they want you to round up to whole dollars or round down to whole dollars. So the amounts are not always going to match. So you got to balance somehow. Some common balancing methods. One of the best ways out there, in my opinion, this is what we do. We balance to gross sales and tax collected. We believe these are two of the most important numbers that an auditor looks at. They look at your gross sales. They want to make sure that it matches everywhere else. And they want to look at the actual tax collected. So those two numbers stay the same. And if we have to make adjustments, adjustments are made to exempt sales. And this is a very common method. A lot of sales tax specialists like ourselves utilize this method. Another one is a forward calculation. And this is, what TaxSure was doing. So the data is run through their software to determine a rate and amount of tax that should have been collected. Now, there are some legitimate uses. Maybe you want to do a forward calculation because you don't think you're paying enough tax, or you don't have the ability to calculate the tax at the point of sale. So you're going to do a forward calculation to find out how much tax should have been remitted. However, as we mentioned, TaxSure did this prior to filing returns for years for everyone. They ignored what was actually collected. This created a ton of overpayments. So, I mean, if I collected $5,000, most of our clients want to remit what they collected. And if there's a discrepancy, they can deal with it if and when they get audited. They don't want some software company saying, "Hey," and the software company doesn't even tell you this. What TaxStar was doing is saying, "Here's how much money we're pulling from your bank." They didn't say this isn't, more than what you collected. They just went ahead and moved the money from your bank directly to the state. So a ton of overpayments can be uh, created by this, and underpayments. Maybe you collected too much tax, and tax collected not remitted is a huge problem. It's a cardinal sin of sales tax, and this can create that also. So forward calculation does have its place, but you can't do it in every situation all of the time and not let people know whether they are paying too much or too little tax. So common balancing methods, adjustments are made to gross sales. This is called grossing up. Um, I think this one causes more problems in audits than any of the other balancing methods. I want my gross sales to be what the state is expecting them to be. I don't want um, uh, someone to think I'm monkeying around with my gross sales. All right, so we touched on this earlier. Notice management. Notice sent by the state generally when they think you owe them returns or payments. You can be spot on, but the states are not always efficient. I mean, you can be looking at a canceled check or a receipt for an online deposit, and the state's saying they never got the money. Or you send the check with the return, and the return's processed, but the check is not. Or vice versa. Maybe the check is cashed, and they're saying they never got the return, and you know that it was in the same envelope. The notice generally comes by mail, but they can also come by email, be posted to your online account, and someone generally needs to address these notices. They don't go away by themselves. Someone's got to tell the state, "Hey, you're wrong," or maybe the state is right, and then you got to fix it. So notice management is a big part of the sales tax returns process. Who's responsible for it? Okay, so the discrepancies between tax collected and tax remitted. And we said earlier this was an issue. We're going to revisit it. Well, as I mentioned, sales tax is collected in dollars and cents. And in some states, you submit in whole dollars. So that can lead to a discrepancy between the tax collected and tax remitted. Discounts. A lot of states, and make sure, here's another question. If there is a discount, is that being passed along to you? There are discounts for timely filing. There are discounts for prepayment or early filing is what I mean by prepayment there. And sometimes a state will call it a vendor discount, and they're usually between, 0.25% and 5%. Some states have caps on them, like Florida, it's a max of $30. Some states don't have caps on them. So that's why there could be differences, and you got to know why. People always, not all people, some people get very anal on why they can't balance to the penny. Well, it's sometimes you can't balance to the penny, and sometimes the state has charges. There's going to be renewal fees and penalties and interest. So lots of reasons why you may not balance or will not balance to the penny, and you need to know what those are and need to track them. All right. So not always easy. Some of our clients wanted the returns to match to the penalty. That's never going to happen. The way that we've solved this is, in the beginning of the month, we're going to send a funding request based on the actual tax that you collected. At the end of the month, we do a reconciliation, and that's going to show the difference between what we remitted and what you collected, and it's going to give a reason why, and it's going to give an amount between the two. So it could be an issue due to rounding, could be discounts, could be balancing. So those are all the issues that when you're doing a reconciliation, does the provider you're using, make it easy for whoever's doing your bookkeeping to figure out why the tax collected is not equaling the tax remitted. And it almost generally never will. All right, so data, a few states allow summaries, but many states require breakdowns. And then generally, especially if you're using software to provide you, to prepare your returns, um, it's got to be broken down into invoice level details. So that invoice level detail for us, it's got to include gross sales. It's got to include tax collected or exempt sales. We'll assume the opposite. If you give us tax collected, any sale without tax collected, we're going to assume is an exempt sale. If you give us exempt sales, we're going to assume the other sales were taxable. And then city, state, and zip. And this is the bare minimum that we need. Other people may require different amounts of data. All right, so the treasury function, and this is just a different way of saying how to tax money actually get remitted to the states. So most states don't allow payments from foreign banks. So if you're an overseas company, how are you going to make those payments? You need a third-party company well, with us, you can wire the money directly to us and we pay on your behalf from the U.S. bank account. It's harder with services like World First and the different money companies out there, because states don't allow ACH credit. They only allow ACH debit. So many of these companies don't allow ACH debit. They only allow ACH credit. And that's why some of these big companies like Payoneer and World First don't work for foreign sellers. Most states do not allow credit card payments. We're seeing more and more of the states allow that, but most of them still do not allow credit card payments. And some states want online payments a day early. We had a person arguing with us the other day saying, well, why is my stuff late? Well, you sent us the money on the 20th. Number one, that doesn't give us a whole lot of time to process your returns. We have due dates. Every company that does returns for you has due dates and cutoff dates. You got to ask whoever's doing your returns, what dates do you need to get that money? And they say, well, you're telling me that I've got to pay all of this money in states like Florida and Texas, and those aren't due to the 20th, and I got you the money on the 20th. Well, if you're filing by paper, they're not due to the 20th. But if you're filing online, they have to have the money on the 19th. And in Texas, if you're a very large seller, they actually need the money earlier than that because you don't go through the state website. You go through a third party. So some states want online payments a day or more early. So how does the money get from you to the states? Well, some third-party methods. Some third parties are going to use your bank account. I've already mentioned I don't like that. I don't like the states to have my information. Some third parties like ourselves requires it to be sent to them. We have all money segregated. Whenever we take on a new client, we open up a sub bank account for them. So it's always their money. It's never commingled. Other companies, they commingle the funds with other taxpayers. But those are two different ways to do it. Third parties move your money from your account. These are just the things I've already talked about. Now the state has full access to your bank account. And if they're trying to clear notices, then you got to give them information to get into your bank account. They only usually have limited access, so they have a hard time clearing the notices. Sometimes the states want proof from the bank that something's been paid. So you're going to have to clear more of your notices or help them clear your notices. I suggest if you're going to have a third party moving the money, you open up a special account set up just for taxes. And when they tell you how much money they're going to need, you move all of that money into the special account. Now, if the state tries and comes to get money, there's not any money in there. It's just your tax money. If the software company is moving money out of your account, I've seen problems with this. They hit one too many zeros and now you're overdrawn and you can't make payroll or anything else. So if you're going to be working with someone who moves money directly for your accounts, I suggest creating a special account just for the taxes so that they do have limited access to your funds, either the state or the third party. There's also what we call fourth party money movement. And this generally happens with, if you have the big four, someone from there, they can't accept funds a lot of time. It's a conflict of interest if they're doing your audits. So a lot of these big four accounting companies, they'll use another company to move your money. So, you've got them doing the returns, remitting it to the state, and then another company actually moving the money. Just adds to costs. And now you've got four people involved, including yourself. All right, so red flags are issues that draw attention to your account. And when you're drawing attention to your account, they increases the chance of audit. So some of the red flags are a pattern of filing returns late, a pattern of filing substantial amounts of exempt sales, returns not balancing to what the state expects, especially if you're doing paper returns, incorrect forms, incorrect rates, incorrect application of credits. That's a huge problem. Is someone going to be able to track your credits from month to month? Are the forms completed incorrectly, etc.? So all of these are red flags, and you want to try to limit your red flags. And that's where the expertise is. The person who's doing your returns actually an expert? Do they know how to avoid these red flags? All right, some states that are tough
Mike,
when you're manually.
before you do this one, can we do a quick poll question?
Absolutely. Let's do a poll question.
All right. So this poll question is true or false? Red flags are issues that draw attention to your account and increase the chance of audit. True or false? And we did just talk about this one in the last slide. So Mike will let answers come in. They're coming in pretty quick still. Most people are saying true. If you want to review this one really quick, then we can close it and move forward.
Yes, red flags. That is a true statement there. All right, so some potentially tough manually filed states. Some states are a lot easier than others. The ones up on the screen, I'm not going to go through all of these right now. We're going to pick Illinois. This is a real tough state. And the reason why is if you have nexus in a state and you have someone physically going into the state, then technically you can register for the retailer's use tax and don't need to collect the local taxes. So that's a good thing. Sometimes your customers might be a little bit upset, but that's one way to go. If you do have nexus, it depends on what type of nexus you have. Maybe your remote seller have no nexus whatsoever, other than you've crossed the threshold. In that case, you have to sign up for the retailer's occupation tax destination based. And there's almost 4,000 destinations. You got to figure out the rates for almost those 4,000 jurisdictions. And you have to, when you're doing the returns, you got to make sure that each one of these jurisdictions is being taken care of. It adds so much time to the process. We had to hire 3 new people just to make sure we got the Illinois returns done on time. If you have a warehouse and you're shipping from a location inside of Illinois, then you only have to worry about the retailer's occupation tax origin based. So one rate and the return is pretty simple. So, the home rule states are tough states, but these are the potentially tough manually filed states. All right, let's talk about some best practices. You got to keep a record of all of your returns, filings, and payment confirmations. You got to keep all the records for at least the statutes of limitations, but I also think that you need a cushion in there because sometimes, an audit gets extended. So you want to make sure that you have a cushion in there in addition to the statute of limitations. We keep everything 7 years. You got to check your accounts periodically to ensure all tax collected is being remitted. You can't just go on autopilot. You can't assume that because the sales guy at the software company said, "Oh, we'll handle everything." You got to make sure they're actually doing it. And then make sure your gross sales match your gross sales listed everywhere else. I mean, in an audit, a lot of times they're going to ask for other documentation, and your gross sales are going to have to, on the returns, are going to have to match on these other documentations. So these are just a couple of the best practices. Now, Ellie, before we go into some of these cautionary tales, I'll do one or two or three of these. Let's do the final poll question.
Absolutely. Poll question 3. Which of the following is true? It is best to keep record of all returns, filings, and payments. It is best to make sure your gross sales match sales listed everywhere. It is best to keep records for the statute of limitations plus a cushion in case of audit, or it is best to never keep documentation. Whatever happens, happens. And again, quick reminder, you do have to answer these poll questions in order to receive CPE credit. Mike, if you want to review this one, we're having answers all over the map here. And yeah, if you want to review this one, and then we can close it out while the last few people are answering this poll question.
Yeah, I believe we need to do it for at least the statute of limitations plus a cushion. And maybe an audit gets started within this statute of limitations. And then, a lot of times states are going to ask you to do a statute waiver. And so you don't want someone throwing out the records while you're in the middle of an audit. So as a best practice here, we do 7 years. That's generally going to cover pretty much everything. But you got to have it for, statute of limitations in most states is 3 to 4 years. Got to have a cushion. So that's how we get to 7 years.
And
all right, let's talk about what.
Sorry, Mike, just a clarification. This is which of the following is not true. So I think what you when you're going through here, it's best to never keep documentation is the not true, correct?
Yeah, that's the not true. I can't read the questions, so.
Oh, okay. Sorry about
that. All right, so yeah, that's the one that's not true. It's best to never keep documentation, whatever happens. All right, so some cautionary tales. These are our case studies. Tale number 1, salesman convinces a company to go with the streamlined sales tax program. And that's a whole nother webinar. We're not big fans of it either. Number one, only certain software companies can offer it. So you're locked in with that person, with that provider. So told them that, go with the streamlined. We'll pay for, 24, 25 of these states. You don't have to worry about it. So the software company begins collecting taxes, filing returns. And the sales pitch, everything's going to be handled. No worries. Only 3.5 years later, only the state taxes were filed in Colorado and Louisiana. And there was $1 million of local tax collected and not remitted. And no one ever told this company. Software company not taking any responsibility. So we had to perform over 100 VDAs. We discounted those greatly. And they became our client at that point. And they had multiple companies, and they moved them all. They could not stand the streamlined sales tax program. And one of the reasons for that is you don't have a whole lot of visibility into your account. With the regular accounts, some states are better than others, but you get a whole lot of visibility into what's being done. A lot easier to double check who's filing on your behalf. All right, questionnaire 2. This is a different software company, similar issues, but there's no streamlined sales tax. Software company began filing returns, no collection, but all the data is run through a software company's rate calculations. 2-year latest, states filed in Colorado and Louisiana, no communication whatsoever. So almost a identical situation as before. So we'll go tail number 3. Software company collecting and remitting for a company. Sales tax is being collected in Virginia. However, the software company never files a single Virginia sales tax return. Instead, they filed 4 years of $0 consumer use tax returns. Now, this company was collecting the tax. They knew that they were collecting an out-of-state use tax. Whoever set it up for consumer's use tax rather than the out-of-state use tax. So 4 years, $0 consumer use tax returns because the settings were done incorrectly. But the software company never let their customer know, hey, you got all of this money building up and we're not remitting it. Are you remitting it, or what's going on here? Software company took no responsibility. And in this one, we had to work it out. We had to contact the state and let them know what's going on. And again, software companies are our greatest source of business. All right, Ellie, let's open it up to questions real quick. Do we have any questions?
Not so far, but this is a great time. If you have a question, use that Q&A button in the middle of the screen. We will be closing out soon, so please let us know. And again, if you're asking questions or you don't get to it in time, please put it in there anyway. We'll follow up with you via email. Mike, anything else you want to go over while we give everyone a quick chance here?
Yeah, let's talk about tail number 4 and one of the limitations of the streamlined sales tax program. So if you do decide to go with the software company and go through this program, make sure you understand who's remitting the local taxes. Is that your responsibility or the software's company? Do you need a special agreement? Do they have to charge you separately? Because it's all in the fine print, but not a lot of people read the fine print. So we have multiple companies coming to us. They said that they listened to the salesperson. Salesperson said, you never have to worry about anything. Just sign up with us. Well, the Washington business and occupation tax on the normal state form is part of the state return. It's the first thing on that return. So whoever's doing your sales tax returns generally files the Washington business and occupation tax with you, for you. But for some reason, it's not on the streamlined sales tax form. So it doesn't get remitted. And all these companies, have $100,000 plus, some of them, of business and occupation tax due. I mean, these are some very large companies. That's why I say large companies, they cannot work with software companies, in my opinion, just too many issues. The Washington penalty is 39%, and that's where they start. It's not where they finish. So you owe $100,000 in business and occupation tax. That's another $39,000 in penalty. Now the interest rates are a lot more reasonable in Washington, but the penalties are crazy. So this company is now with us also, and they are providing us with multiple referrals. But since this first one, we have multiple issues. So again, if you do decide to go with the cheap option, and remember, cheap is sometimes the enemy of good, then make sure you're asking these questions. Make sure you're setting up an alternative to get the Washington business and occupation tax. Make sure that you're doing something to get the local tax jurisdictions that they're not doing remitted. Any questions, Ellie?
Yeah. So someone asked, Do you see issues with people doing their own registrations?
Um, yes, we're starting to see those a lot more. Registrations sound like they should be simple, but they're not. We even see accountants making a lot of mistakes. The states make it look like you need to register with the Secretary of State in every state. And in most instances, especially if you have just an economic nexus, you don't. When you register with the Secretary of States, you're subjecting yourself to a whole nother issues, and one of them could be income tax. So making sure that you know how to utilize the online registration systems, what the workaround is a big deal. Knowing that you don't need something is a big deal. And then perhaps the biggest deal is making sure you're registering for the right type of tax. I mean, consumer use tax versus seller's use tax, or vendor's use tax. Um, Signing up for a sales tax rather than a use tax. In Colorado, prior to Wayfair, and they put in their thresholds, if you were an out-of-state seller, you would register for the Colorado use tax, and you didn't have to worry about collecting the local jurisdictions. But once they put in those thresholds, they said, okay, now everybody who has nexus due to a threshold has to use sales tax. We still see people registering for use tax. They're not collecting enough tax. 2-3 years later, they get audited. And we see these types of problems in Illinois, in um, you know, Colorado, and there's a lot of other states. One of the big reasons for that is technically any state that any tax, this is historically technically, any transaction that crossed the state line was technically a use tax because of the way that um, things came about. Sales tax was entirely within a state, and a use tax was one that crossed the state line. But since we have Wayfair, that's really been changing. And a lot of these states take the opinion that once you cross these thresholds, that's enough of a significant presence that we're going to treat you the same as if you have a physical presence in the state. So we're seeing lots and lots of mistakes being made in the actual registration process. And then, even if you register correctly, when you're setting up whoever to collect your taxes, that's being done incorrectly sometimes. You may have registered for the right tax, but inside of the software company, you told it that you were collecting one type of tax. In Avalara, a big deal is, you know, you used to want to click sales or seller's use. Or sales or use tax. And then the software would look at where it's being shipped from and then to decide whether to use the sales tax or use tax rate. Nowadays, you cannot use that setting in a lot of states like a Colorado. You have to go in and say sales tax only. Otherwise, for sales outside of the state, it's going to just charge the use taxes. So setting up these software companies to collect the tax correctly is one part of the issue. Doing the registrations is another part of the issue. Any other questions?
Thank you so much, Mike. You know what? No other questions right now, and we are also out of time. So if you have more questions, if you'd like to work with us, please reach out. We would love to hear from you, and we would love to work with you as well. Mike, anything else you want to add in?
Not at this point. We appreciate all of you who have been here. I hope that you did gain some knowledge and that I was not too salesy during this presentation. We've got a lot more webinars in the pipeline, some newer ones that, we have the 7 pillars of a successful sales tax strategy. We're going through each one of the pillars individually. So Ellie will get out information on what the upcoming webinars are, and we hope to see you there.